Good afternoon, everyone. David Paul speaking. It's just about an hour before the US Open on the 27th of July. Vectorvest on the American market is saying that the short-term trend or the primary wave is up and the longer-term trend is up. And as you can see, this green light in the price column of our color guard shows us that the price is up day over day and week over week. And the advice, Vectorvest advocates buying safe, undervalued stocks that are rising in price at this time. I think it's quite an exciting time in the American market and by default in the UK market as well. If I go to the Vectorvest market timing graph, and what I'm looking at here, ladies and gentlemen, is a daily chart of the Vectorvest composite, which is all of the shares that we follow in the US, about 8,000 odd shares. And as you can see, that's the longer term trend turning up as the market broke out of this five wave symmetrical triangle and is pushing strongly on this resistance area that would have seemed to have been found resistance once, twice, three times. Is it pushing for the fourth time? This is a very important level, folks, and for those people that are Fibonacci fans, that is in fact a 78% retracement, and I've been speaking to this about this to the Vectorvest subscribers at our weekly meeting on a Monday afternoon for a very long time. It came off that level. That's a textbook Gartley pattern. It came off that level, it came off that level, and now it's doing its best to push. This is a critical level, folks, and I wasn't sure whether this was going to break now or whether it was going to break after the August lull after Labor Day, but it's having a good go at it at the moment. If I look at a longer term chart and I look at a weekly chart over 3 years, we can see quite a bullet. Let me take all the extraneous stuff off the chart. There is a very strong trend up the page. We've just broken out of this five wave symmetrical triangle, and my old friend a weekly MACD shows a very strong reverse divergence or a slingshot to the upside. In addition to this, Dr. Bart Toledo, who's the founder of Vectorvest, has a fundamental model of the American market that he's been in fact working on for 30 years. It's based on earnings, interest rates and inflation, and he in his weekly essays is saying that we're still within a bull market. So my technical model, which is quite subjective, I know, and Dr. Toledo's much more objective fundamental model is saying that we're still in a bull market, and for that reason I'm looking at quite a defensive stock, I suppose. And if I go to viewers this afternoon, I'm looking at Centene. Now, it's a share that I own, and it's a share that has got outstanding fundamentals. We believe it's worth 133, but we believe that the price is 133. We believe it's worth 187. The relative values, which is a measure of the price appreciation potential over the next 3 years in relation to a AAA rated corporate bond, is 1.57. Above 1.3 is excellent. The safety of the earnings stream, 1.46. Above 1.3 is excellent. RT is good, relative timing, and it's got a very strong master indicator, VST 1.44. It's on a buy recommendation with a stop loss at $120. We believe it's going to grow earnings at 24% next year. So if I look at the chart, I need to just pull this up quickly. If I look at the chart, the share has been trending for quite a long time. There is our valuation, and the valuation pushing above the price. As you can see, earnings per share growing over the last year. It's grown from $5 to $6.80, and I like to see earnings per share moving up from the bottom left to the top right of the chart. And I've found, and though it's anecdotal, but I've found the smoother it rises, the easier goes the trading. Let's have a look at the chart. So with the fundamentals in place, I can get rid of the value, I can get rid of the earnings per share, and let's look at a 6-month chart. These moving averages are the ones that I put on every chart: 21, 55 and 89. For some historical reason, the 21 and the 55 are exponential, 89 is simple. And I always say that the area between the moving averages is the zone. The market likes to come back into that zone. You see, it did it here, it did it here, and it did it here. Now, we have pulled back. That was on trade issues, and the way I suggest we play this, folks, is that if the general market still keeps going up and we break this top, then I suggest that Centene should be accumulated, and I reckon if we put a 3-month chart up, if it breaks that level, and we could use a stop loss underneath this, which would be about 129, so it would be an entry point slightly above 135 with a stop loss around 129. That's about a 5% stop loss. Now, that is an inside day, and many people would use the inside day as a method of getting into the market. It's on a buy recommendation, and it's been on a buy recommendation for a very, very, very long time, and I've been holding the share since down around here. But if all goes well, I shall hopefully be adding to that position. I remain, the bull market is mature, but it remains intact, and until something changes in the technical picture, then I shall be doing what VectorVest tells me, and at the moment it's saying it's time to accumulate those shares that are undervalued, that are growing their earnings strongly. I hope this helps in some way. Thank you very much. Bye-bye.